So, welcome back, guys, on our today episode of trading GBPUSD. So, I already said on my previous videos that you to understand my videos, you need to make reference to my previous videos. So, on my previous videos, I already said you already have a market structure sheet on 1 hour and 15-minute time frame. Let me show you a market structure sheet on 1 hour. This was the last low that came to break structure here. So this was the protected low. So price already broke through it. So let's go down to our 15-minute time frame. This was the last low that break structure here. So this was the protected low. So price already broke through it, which caused our market structure shift. So today I traded the retracement on GBPUSD. What I want to say to us guys is when trading, you need to be able to spot liquidity. Yes, that's the most important in trading. You need to be able to spot liquidity. Now let me tell you how I spotted liquidity on this trade. So immediately market mitigated my 15-minute time frame. 15 minutes buy order block. So immediately market mitigated it. On our 5 minutes, market already caused a market structure shift. As you can see on our 5 minutes, this was the last low that came to break structure here. So market already broke to this place with a body candle. So market retraced back to our 15 minutes buy order block. Look at what market did here. That's why I said it's very good. Like when you are able to spot liquidity, then the market will play according to your rules. So look at what market did here. Market created another block here, then come back, mitigated it, then come back, mitigated. So all this move here, higher low, are all liquidity for the market. So these are all liquidity that prompted me to trade this market. See, as you can see, these are all supply zones. So immediately market grabbed liquidity from grab the liquidity from this demand zone right here. This demand zone right here is what is causing the market to react. So immediately market grab liquidity from here. So I have to like jump in after the next green candle, which is this candle. You can also see here. So I already know market is coming to sweep the above liquidity here and here. So and also here there's liquidity here, supply zone. Let me tell you I decided there's liquidity here. This was I already said we are now on a down trade. So this was the last low that came to break structure here. This low that came to break structure here. And as you can see, it's a supply zone. So market went to break it. So as you can see here now, market is tracing back. So which means market has already tapped liquidity from here and it's now retracing back. So but this is the zone I want to trade this market. So I'm still expecting this market up here because this is my liquidity pool. This play right here is my liquidity pool. Now let me mark it out. Liquidity pool right there. These are our liquidity. This supply zone. So this supply zone right here has already been mitigated. So there is a lot of sell order here. So market is going to take it out. And same as this here. So if you go to our 5 minute time frame, there is also a supply zone here. So market is going to take the liquidity out, then boom. So I'm waiting for a sell up here. So let me show you my plan right now. So initially for the sake of my stop loss, I usually put this on the fair value gap, like just 50% of the fair value gap, because there's liquidity here. So market might just put a wick and sweep this place, this zone, this supply zone with a wick and then come back down. So now let me tell you why markets will come back. Now there is a zone here. Market has already mitigated it. So there are a lot of buy options here. So market is going to come down here. So that is why I'm going to take a sell here. If I am not seeing liquidity down there, I will not take a sell. up to that place, but I will not take it up to that place, not to be greedy, just like I only targeted 1:3 here too. So as you can see, when market mitigated this zone, market reacted to this zone. So any zone is likely to move markets. Any zone, no matter how small it is, any zone is likely to move markets. So that is why you should not be greedy when trading. So I just targeted this zone. Possibly this zone might have move markets back down. So any zone can work. Any zone can work in trading. So that's why you should not be greedy. Initially, I was supposed to target something like A and D, but don't be greedy. So that's my plan. So when you are trading from a demand zone, you target the next possible supply zone, even if it's 1:2. That's why it's important that you should not have a fixed ratio in trading. So it's important that you don't have a fixed ratio when you are trading. So like just target the next ratio, the next supply zone. If you are trading from a supply zone, just target the next liquidity of the next demand zone. So that's it, guys. Thank you for watching us.